Welcome back. You're still tuned into Midcap Masala, and we now have the management of IREDA joining us on the show. They had reported their numbers yesterday. Pradip Kumar Das, CMD at IREDA. Sir, thank you so much for taking your time out and joining us here on ET Now. And I want to start by asking about net interest margins, which have expanded to 3.7%, a growth of about 12 basis points sequentially, and cost of funds has also fallen. How is the trajectory expected to continue going forward?
Very good morning. Thank you. Not this quarter. If you look at last 22 quarters, the growth is happening almost in a similar manner. If you see the operational growth, 22 quarter, we have been very consistent and growing. And we are working on overall improvement, not only minimizing the cost and optimizing the revenue within the defined parameter, because you being the responsible agency for speeding up the RE development through financing. We have to ensure that the financing happen in a disciplined manner so that the RE development speed doesn't get dented. So that is there. And we are looking into various options of borrowing from cheaper sources. And we have resorted to domestic as well as overseas. Since May 20 onwards, we have not accepted to overseas borrowing. Last quarter, we had looked into JPY and we used to compare always the landed cost, whether it is giving us beneficial result, that only. Otherwise, if you look at, since 97 onwards, IREDA used to resort to heavily on the overseas borrowing. Because in March 1920, it was 57% was overseas borrowing and 43 was domestic. Now it is 86% domestic borrowing, 14% overseas. But now we have recently traveled to Japan, Singapore, etc. and all for looking into the debt market. And we are happy to share with you, they are surprised to know that we are a pure 100% green finance company and having this kind of qualitative corporate governance, who is reporting the result fastest in India in banking and non-banking space, as well as almost doing every quarter full audited results. So that kind of governance probably the Japanese investors are looking for, and they're eagerly waiting for our debt borrowing to the market.
Indeed.
And if you look at, when I said 22 quarters, operational performance, there was no doubt, except for the last quarter where our operational, post-operational, that is provisioning was there because of a couple of accounts.
Indeed.
And largely one account which was indisciplined.
Yes, indeed. Mr. Das, we have talked about it as well in detail, but just wanted to understand what's your outlook on NPAs, because this time as well we have seen your gross NPA, net NPA falling a bit on a sequential basis, but how quickly can it fall or rather reduce further? What's the outlook over there?
If you look at half-yearly basis, yes, NPA has grown up because, as I said, in the last quarter, the NPA got impacted because of two groups. And one group that is well known in the market, I think not only we, almost 17, 18 lenders, that is Gensol Engineering. And if you ask specifically, as far as that is concerned, probably it is history and IBC that within just 29 days, our application got admitted in NCLT. And the IRP was appointed, and subsequently IRP was converted to RP. And we also engaged one IP to support that. Though we are the lead lender, but we do not have the absolute majority to take all the decisions. So therefore, at times we feel that the speed in which IREDA takes the decision, probably other lenders are not able to cope up with that. But good part of it is that majority of the cars has been traced by the RP. And agency has been engaged to keep it upkeep and ready. And some of the cars probably will be ready to run on the road. So once a bunch of cars are running on the road, then the persistent about the asset quality will completely undergo change.
Understood.
And this is a car finance. It is not a project finance or infra finance where you need to worry. So,
Mr. Das, we have to take a quick mandatory commercial. We'll come back to you in just a minute. Just stay on with us. I wanted to ask you about your yields on advances, which have come in at 9.87% in the quarter gone by, a decline of about 8 basis points sequentially. Is that a concern for you, and what will your outlook be as far as yields on advances is concerned for the next few quarters?
I think the NPA part I'll address, that was incomplete, and then I'll come to this. To you and all the investors, we have financed so far in the lifetime of IREDA 1.71 lakh crores. And when we finance majority of the new and emerging, that means if I am driving a car, some amount of road is unknown for which I have to take the risk. Despite that, our cumulative write-off is 135 crore, which is 0.08% of the total finance. So that is giving an indication and confirmation that in IREDA, NPA happens, but it doesn't translate into write-off. So that is important. And now coming back to the NIM. If you compare H1, our NIM has been improved. Quarterly, fine. There was a slight dip. But if you look at half yearly, the NIM is improved and the borrowing cost is gone down. And see, we are in a sector which have to support for development of the RE. And as I said, certain emerging RE where normally the bankers and other lenders will not come forward, being the standard arm of MNRE, our prime responsibility and capacity also, competency to support that. And we have done that since last 38 years. So therefore, we do not maximize the NIM. I think today, if you are having 3.72 NIM, that's quite fair. And it is important that how best we maintain the discipline and our asset quality. Revenue is there, profit is there, asset quality is to be ensured. And the asset which were dented in last quarter, if you ask me with respect to Gensol, now the RP has taken the majority of the cars by its control, and very soon they are working on this. The committee of creditors are there, though we are the lead, but we don't have absolute majority. So what the COC decides, and accordingly, they have already engaged agency to keep the car ready and get it rerun on the roads. And almost in the advanced stage of finalizing the agency to lease it out, and also parallelly exploring the outright sell of the. So various options are there. That is one. Second, another group which was largely having Andhra-based project, where because of the state government's decision for changing the PPA rates and all, which finally eventually through courts and all it sorted out. So they have submitted a resolution plan, and the non-fund based one account they have completely fully paid, and two accounts they have submitted for OTS. The company has approved that with the agreed terms, and we are confident that is going to be settled very soon. And the other accounts, 3-4 accounts of the group is under resolution, and we hope that by December or worst by March will come out from the major year, which happened in the last quarter. So as long as we maintain the NPA, then looking into NIM and yield will not be an issue in the time to come. So our major concern last quarter, that was the concern of the investor, and so there were major concern for that. But probably that is a huge blessing in disguise. Because of one account, we could scrutinize all our data and records historically and make everything updated, ready and available. And we have addressed all the regulators and other agencies who are concerned with respect to this. I cannot divulge much information with respect to Gensol because that is under investigation.
All right, Mr. Das, really good chatting with you, and thank you so much for giving us such detailed answers. Thank you so much for taking the time out and speaking with us.
Thank you. Thank you.